Result reactions coming in today. Ashok Leyland, JSW Steel, Atul Limited. Anything that caught your attention, and even Ultratech Cement and Dalmia, Bharat?
Yes, indeed. Good afternoon. Ashok Leyland looks good. There's been a margin expansion. There's a reduction in operating costs, lower raw material prices, and mind you, the CV recovery cycle is still very early stages. So the benefit of the lower commodity costs that goes into the input will benefit Ashok Leyland and other CV manufacturers. In the case of cement, the volumes, both Ultratech and Dalmia Bharat, all of them showed that the volumes were strong, but the pricing is weak. And therefore, overall, in spite of costs coming off, input costs coming off, the margins are not likely to improve. Against this backdrop, it's unlikely that cement companies do well in the near term.
Okay, cement companies are not likely to do good in the near term, but Reliance Industries, do you think that is going to be an outperformer at all? Because the street seems to be going in very, very weak expectations right now.
Yes, you're absolutely right. Refining margins are likely to be weak in this quarter. And that's kind of the bread and butter of the company. But what will hold it up is retail margins should kind of improve. And most importantly, there's a ton of work that's happening in the green energy space. In Reliance Industries, I think about 100 gigawatts of renewable energy plants are going to go on stream in about a year from now. Battery storage, 5 gigawatts is what they're talking about. Very big plants, electrolyzers. So these things will start adding to the valuation of Reliance Industries and also other companies. Reliance Industries, for instance, holds 40% in a company called Sterling Wilson. Now, companies like that will also benefit a lot.
Right. Okay, that's the anticipation, expectation from Reliance. From Kotak and ICICI Bank, the earnings tomorrow?
I think the earnings will be good in terms of, the loan growth will be very strong, but there will be a hit to the margins, net interest margins, because of partly depository pricing as well as the lag. But, with the economy picking up, the loan growth should accelerate going forward. And the value, Kotak hasn't really done much in the last year or so. And so it's very important that they show an acceleration in their loan growth. On the other hand, ICICI, I think the numbers will be much stronger.
Okay, so that's a take coming in on ICICI Bank as well as Kotak Mahindra Bank. But shifting focus with respect to which are the other things which are going on in the market right now, and what's going on is the entire IT debacle, because Infosys is down 8%. It's taking down Persistent, KPIT Tech, Tech Mahindra, Coforge, HCL Tech, TCS, and the list really goes on. There's hardly any name except Infosys, which is actually in the green. You know what, Chakri, would you use this opportunity to buy any of the IT names?
I think what happened to Infosys is probably an Infosys thing rather than a tech thing, because, it's quite surprising that, they cut down their revenue guidance from about 3 to 4.5% to about 1%. So what this does is basically now it brings down earnings growth for FY24 to almost a flat earnings growth. So which means going into FY25, the company should grow, or rather is expected to grow about 15%. If you do all the math, then it turns out to be about 20 times. So I think you'll have to wait for a quarter to see if the orders stalled are coming back for Infosys. And therefore, for Infosys, I think now it won't fall further much from here, but I'd rather wait because there's not much upside unless they show that the orders are actually being executed.
Wanted your take in the meantime regarding the entire real estate pack, and by real estate I also mean the ancillaries, building materials, consumer durables, wires and cable companies, etc. What's the best theme, do you think, out of this that you would want to take a bet on?
Polycap numbers came out to be really strong. I think that as a space, if you look at the numbers, revenue up 40%, bottom line up 80%, and very strong order momentum. So companies in that space, including Finolex, looking very strong. In spite of the stock has had a really good run up, that is Polycap, I think the fundamentals are still very intact. The business momentum is extremely strong. And so I think, Reliance Industries, Polycap.
Okay, so Polycap, that's a top bet coming in. Those are some of the lines for you on the bottom of your screen. Morgan Stanley on HDFC Life, they maintain the overweight stance with 800 rupees. But they say that the VNB is actually 2% ahead of the estimates. There was a bit of a sell-off in the stock after the release, but they're saying there's no reason for that. So maybe we'll see a bit of recovery, and that is already underway. They're saying it's a good result, prima facie. They do not see any negative, and we are seeing that reaction there as well. But Chakri, within the insurance and the ancillary space itself, HDFC Life had seen quite a bit of run-up. SBI Life was on the back foot. And then there were these reports about AMC stocks also coming back to favor, given the fact that the entire TR ratio was going to be relooked by SEBI.
Indeed, but that as a space I'll still stay away from, because it's a game which is becoming one of a declining margin business, and therefore, operating leverages which used to work for the AMC industry is not working because of the controls that SEBI is placing in terms of pricing. And therefore, a larger asset base does not necessarily translate into a higher profit margin as used to be the case. And I think so this industry is likely to therefore trade at a far lower multiple than it used to trade in the past.
Chakri, what's the call on ITC? We understand from our exclusive sources that perhaps a demerger of the hotel business could very well be on the cards, and the announcement could come in even before the AGM, which is due next month.
You're absolutely right. If this event does happen, and that would be a huge unlocking, because investors have waited for a long time now for a demerger of the hotel business, and that changes the cash flow profiles of ITC as a company, some of parts quite dramatically. And because one is an asset-intensive cash flow, capex-intensive business, on the other hand, one is a very operating high-margin business, the cigarette business. And I think so. If that event does indeed happen, I think there is a significant amount of unlocking that is yet, even in spite of all the run-up that has happened in ITC.
Right, so that's the take coming in as far as ITC is concerned. Chakri, what's your take within the entire PSU banking space apart from SBI? Which are the names that you like?
One of the things which was holding back PSU banks was the expected credit losses. Now that the RBI has clarified that, they have given the banks sufficient time, and it's happening at a good time in terms of the timing, because banks' balance sheets are strong, loan growth, etc., is going to improve as the economy picks up. And so, as a result of this whole thing is, at the end of the time frame, when ECM is finally implemented, you will have stronger bank balance sheets, which means you'll be able to afford a higher multiple to PSU banks. So whether it is Bank of India, which I like, Canara Bank, Union Bank, apart from SBI, all these things are trading at very low multiples, and therefore, after ECM, knowing that ECM is going to be implemented, you can start giving higher multiples.
Okay, Chakri, we'll let you go on that note. Thanks as always for taking the time out and joining in today.